Europe seems in the throes of a recession. U.S. is stuck in a fairly slow and painful recovery. So to the degree there's going to be economic growth, it'll be in the emerging markets.
There's always going to be a constituency that will invest in obviously developed markets. What I think will happen over time, and this has happened already, is you're seeing more and more investors building up their knowledge base about emerging and frontier markets.
I think that emerging markets are going to make up more and more of an asset manager's portfolio over the next 10-year period.
You're looking at countries where you have a good fiscal position, so low debt, strong growth prospects. We're sitting here in Doha. This region is probably a very good example of a region that ticks a lot of the boxes in terms of fiscal strength, very large government reserves and government wealth, which are now being invested very aggressively to drive growth into the local economies, and will be for the next decade probably.
We're particularly keen on China. We think that it's been widely misunderstood. We totally disagree with the idea there's going to be some sort of a hard landing.
I like Russia. I think the banks are particularly interesting at this time. I think investors are still a bit nervous about putting really putting a lot of capital into Russia until they're more sure of the regulatory framework. But as a growth area, I'm a young, energetic, well-educated population. I like Russia.
There are also probably the smaller countries, probably some in sub-Saharan Africa, the likes of Botswana or Rwanda. There's places in Latin America, there's places in Central Asia.
Turkey, Saudi Arabia, Egypt, to some extent Qatar, and the UAE, those are markets that, because of their size, tend to offer more interesting opportunities.
There are still opportunities out there. The job of investors is to go and hunt for them.